Hey everyone, it's Dan Faulkner. I'm working from my home office today, but there's a lot of things going on in the real estate market. I just wanted to give you a quick update on what's happening. So, March 31st, the Federal Reserve pulled out of its mortgage-backed security buying program. Now, this was a program instituted by President Bush back in late 2008 as kind of an emergency measure in dealing with the issues going on with banks. They wanted to pump more liquidity into the secondary mortgage market, which is essential to the real estate and mortgage industry as we know it today. They wanted to keep it going, so they started a program where the Federal Reserve could buy these failed mortgage-backed securities and subprime loans. President Obama continued this policy. It was actually supposed to stop 6 months ago, last fall, but it was determined at that time that the market just wasn't healthy enough and we still needed the help. So it was ended March 31st. One of the anticipated side effects of that is interest rates going up. Now, many experts are anticipating, half a point to 1%. And, doesn't sound like a lot, but 1% increase in interest rate increases your monthly payment by 10%. So luckily, we have not seen a huge impact on interest rates as of yet. We're probably going to have to give it a couple more weeks, but the fact that interest rates have not gone up a half point to 1% since the Fed stopped buying the mortgage-backed securities is a great sign. The other concern over interest rates is concerns over inflation because so much money was printed in these stimulus packages. Many economists are concerned with the fact that there's just so much liquidity that it's going to cause inflation, which is bad for the bond market, which is bad for mortgage interest rates. So a couple of things to keep an eye on, but so far, the big Fed pullout is going pretty well. Other thing, of course, is the expiration of the tax credit, the $6,500 for move-up buyers and the $8,000 for first-time buyers. So all those buyers will have until the end of April, April 30th, to make their purchase, get into contract, and they'll actually have 60 days to close. They'll have until June 30th to close their transaction, 60-day escrow period, usually more than enough time unless you're involved with a short sale or something like that. And also keep in mind that a first-time buyer is defined by the federal government as someone who's not owned in the last 3 years. So you don't necessarily have to have never owned a home before, just not in the last 3 years. And there's also some income eligibility requirements, which I'd be more than happy to share with you. So, any of those first-time buyers or someone thinking of moving up, only a couple weeks left, probably time to get in gear if they want to take advantage of that. So, anyhow, talk to you soon. As always, any questions or if you need anything from me, don't hesitate to give me a call or shoot me over an email. Always happy to help out. Take care.